So hello, what's up? I hope all of you are doing great. Welcome to the second part revision of SEBI LODR. So in case you are new to the channel, do subscribe the channel for more such videos and do like the video as it motivates me for making more and more good videos for you. So here we start with the revision part. First of all, the topic's name is Code of Conduct. The Code of Conduct means how you expect the senior management and board of directors of the company to behave. So first of all, this code of conduct will be prepared for the senior management and the board of director. For whom you are preparing this code of conduct, they also need to give an annual confirmation, not half yearly, not quarterly, not monthly. They need to give an annual confirmation, all the board members and senior management. Now whose duty it is that he or she needs to give a declaration that all the board members and senior management have given the confirmation? Sir, CEO. So CEO shall give a declaration. CEO shall give a declaration in the annual report of the company that every senior management and board member has complied with the code of conduct. Now sir, as an auditor, where can I find the code of conduct? You can find it on the website of the company. And last point was regarding the independent director. So whatever duties an independent director is required to comply as per the Companies Act 2013, that will be contained in the code of conduct. Is this part clear? Yes sir. Now let's talk about the vigil mechanism. Sir, talking about the vigil mechanism or the whistleblower policy, this is something which we also discuss in CARO 2020 clause number 11, that is regarding the fraud. Okay? In that fraud part, I think the third part talks about whether the company has a whistleblower policy and whether any whistleblower complaints have been received during the year. Okay? So similarly, here we are also talking about the whistleblower policy or vigil mechanism. Also, it is discussed in your company law in your section number 177. So whether the employees and directors can report the genuine concerns, and if they report, there are proper policies to safeguard them from victimization in case they are reporting something, and they can also reach out to the chairperson of the audit committee in exceptional cases. The main thing that you need to learn here from MCQ point of view is details of the vigil mechanism shall be there on two places. Okay? Website of the company and the board report of the company. Then we discussed about the material subsidiary. So talking about the material subsidiary, what is the limit that you consider generally? Sir, 10%. So in case there is a subsidiary whose share in the consolidated income or net worth is 10%, either of the two. Okay? Any subsidiary whose share in the income or net worth of the consolidated income or net worth is more than 10%, it will be considered to be a material subsidiary. But only for one case, this 10% will become 20%. Sir, what is that case? Regulation number 24, sub regulation 1. This question we also did in the class. Sir, what is that case? One of the independent directors of the listed entity, come on, one of the independent directors of the listed entity will become a director on the board of the unlisted material subsidiary. So this provision is applicable only for an unlisted material subsidiary, and for materiality, here the limit is more than 20%. Is this part clear? Yes sir. Then we have three provisions which don't talk about materiality, but they talk about only the unlisted subsidiary. Sir, what were the three provisions? First provision was audit committee of the listed entity will review the financial statements of the unlisted subsidiary. Got it sir. Second provision, minutes of the board meeting of the unlisted subsidiary will be placed before the audit committee, will be placed before the board of the listed entity. And the third provision was very amazing provision and something interesting. All the significant transactions, come on, all the significant transactions which are done by the unlisted subsidiary, they will be reported to the listed entity. Now here the question comes, what is significant? So anything which is more than 10%, anything which is more than 10% of the total revenue or total expenses or total assets or total liabilities, it will be considered to be significant. And then at the end of the day, we talked about some material subsidiary points. So what were the two material subsidiary points? Two material subsidiary points were very simple, that in case you are losing the control, in case you are disposing of the shares of the material subsidiary such that after disposal of shares, your percentage of holding will be 50% or less. Got it sir. Or you will lose the control, you need to pass a special resolution. But sir, in some cases special resolution is not required. What were the cases? In case such arrangement is approved by a court, it is approved by a tribunal, or it is approved under the insolvency and bankruptcy code, then you need not pass the special resolution. Got it, sir? What is the second case? In case you are disposing the assets more than 20% of the total assets of the subsidiary, again you need to pass a special resolution. The exemption of not passing a special resolution stays the same. Also, if you connect it with law, these points are also there in your section number 180. So if you are able to connect with the law, it will become very, very easy for you. Then we discussed about a very small and cute topic, that is secretarial audit and secretarial compliance report. For whom does it need to be given? For the listed entity and material subsidiary. No, unlisted material subsidiary. So it very clearly says every listed entity and its unlisted material subsidiary needs to get a secretarial audit done, and a secretarial compliance report needs to be submitted within 60 days. Come on, within 60 days from the end of the financial year. Is this part clear to all of you? Yes, sir. This 60 days limit is also there in your supplementary audit when you study PSU audit. This 60 days limit is also there in your LFAR when you will study bank audit. Got it, sir? Now talking about the informations to the shareholder. Sir, by when the annual report needs to be available to the shareholder? There should be minimum of 21 days gap before the AGM that the annual report should be made available to the shareholders. Now, sir, whenever a director is appointed or reappointed, what is the information that needs to be given to the shareholder? First of all, whenever you are appointing someone, you need to talk about his resume. Got it, sir? What is there in the resume? Expertise, experience. Say it with me. Expertise, experience. So you talk about the expertise in the functional areas, experience of working in small entities or listed entities? Sir, listed entities. So experience of working in the listed entities, name of the listed entities where the director has worked in the last 3 years, and also the listed entities where he has resigned in the past 3 years. So this experience you need to talk about. Also, you need to give the position to that person on the basis of expertise and experience, not because of relation. So you also need to disclose the relation between the directors inter se. And then the last 2 points were regarding non-executive director and independent director. Very easy point, just read through them. Then we discussed about transfer and transmission of securities. Sir, who has to take care of the transfer and transmission? We have so many committees, they will take care of it. They said no. Okay, sir. Then for this compliance, we can have a compliance officer. Compliance officer said no, I have too many things to comply with. Then we appointed someone who is known as a registrar and share transfer agent. So these are the 2 separate parts, registrar to an issue and a share transfer agent. So these are the 4 people who you can give this responsibility. Sir, who are the 4 people? Committees, compliance officer, registrar or share transfer agent. What is the interval of time that the person has to comply with this thing? Once in a fortnight. Okay? Once in a fortnight, this requirement should be complied with. Why? This is the requirement of SEBI LODR, and this can also be asked in your MCQ. Then today we discussed this topic called management discussion and analysis. Again, what are the contents of management discussion and analysis that forms part of the annual report of the company? Sir, very easy. First of all, they discuss about the industry structure and development. In every industry, there is a SWOT analysis, that is the opportunities and threats analysis. This was the point. When I talk about threats, what comes to your mind? Risk. So risks and concerns, and for every risk, entity has an internal control. So 4 points. Done. Again with me. When I am talking about the management discussion and analysis, what they will discuss? Sir, industry structure and developments. For industry, what analysis you do? SWOT analysis. That is opportunities and threats analysis. With threats, what comes in our mind? Risk and concern. For risk, there are internal control. So 4 points done. Now let's talk about the own performance. That is financial and operational performance. You can also talk about segment wise and product performance. How you understand the financial performance? Through financial ratios. What was the specialty of financial ratios? You need to disclose significant change. Say it with me. Significant change in the financial ratios. What is a significant change? 25% or more. Also, similar financial ratio that you need to talk about here is change on the return on net worth. Got it, sir? Then comes the next topic, disclosure of events and information. It's very easy point. Whatever material events and transactions are there, they need to be disclosed on the website of the company. Sir, when they can be archived? After 5 years. They should be hosted on the website for minimum of 5 years. After that, as per the archival policy of the company. Then we discussed about related party transaction disclosure. When they need to be disclosed? Quarterly, half yearly. Come on. quarterly, half yearly. Quarterly report needs to be submitted within 21 days. Within 21 days from the end of the quarter. Who will sign? C or C. That means the compliance officer or the chief executive officer of the company. Whatever be the policy of the related party, that needs to be disclosed on the website of the company. Sir, when do the half yearly results need to be disclosed? So earlier, earlier that it was written within 15 days of the publication of standalone financial statements and consolidated results. But after one amendment, please note it that now starting from 1/4/23, they need to be disclosed on the day of publication. I am sure it may not be there in your notes, so please write it with me. On the date of publication of standalone and consolidated financial results. So this I am talking about the half yearly part. This is applicable from 1/4/2023. So applicable for your exam. Got it, sir? Whatever be the policy, it will be placed on the website of the company. Sir, does this policy needs to be, you can say, revised? The answer is yes. This policy needs to be reviewed at least once in every 3 years. So if I talk about the risk management policy, since that's a risky policy, it needs to be done once in 2 years. But if I talk about the related party transactions policy, it needs to be reviewed once in 3 years. Now, what is a material related party transaction? Sir, material related party transaction is one which is above the threshold limit. Now, what was the threshold limit? 1000 crore. Say it with me. 1000 crore. So 1000 crore or 10% of the consolidated turnover of the company, whichever is lower. So if it is above this, it will be considered to be a material transaction. Very important from MCQ point of view. Do repeat it thrice or 4 times. Okay, sir. Now you just need to read through this part. Then we discussed about sexual harassment of women. You need to talk about the complaints filed during the year, complaints disposed of during the year, and the complaints remaining at the end of the year. In case you are following an accounting treatment different from the accounting standard, you need to disclose the same in your annual report. Also the reason why you are doing so, how it will lead to a true and fair view. Got the point? Yes, sir. And the last topic was statement of deviations and variations. Statement of deviations and variation, you need to provide quarterly and annual. Quarterly statement of deviation. Then in those deviation, you need to provide further details about category wise variation. Come on, category wise variation. What are the different types of category? Capital expenditure, household expenditure, nothing like that. Okay? What is household expenditure? Capital expenditure. Okay, then you talk about sales and marketing expenditure, working capital expenditure, like this. And till when you are required to give those disclosures, till the full amount is utilized or the purpose is achieved, whichever is earlier. And in case you have done section 4262. In case you have done section 4262, sir, what is 4262? Preferential allotment or private placement. You need to provide annual disclosure of the funds utilized for the purposes other than those you mentioned in your prospectus. Then the last 2 points are very similar from what you have studied already in the audit committee part. Mandatory review of information by the audit committee, quarterly statement of deviations including the report of monitoring agency, and the annual statement of funds utilized for the purpose other than those mentioned in your offer document, prospectus or notice. Then we discussed about the compliance certificate. Come on. Last part, add the energy. Compliance certificate needs to be given by C and C, but here the CEO remains the same, but instead of compliance officer, we have a CFO. Sir, what do they need to give the compliance about? About the financial statement, about the transactions. They have not done any hanky-panky. The transactions are not fraudulent. The internal controls are adequate. They are operating effectively. In case in the internal control, there is some significant deficiency, it has been disclosed to the auditor and the audit committee, and they have taken corrective action for the same. Also, they have disclosed to the auditor what? Connecting this point below. In case there are any significant deficiency, the instances of significant fraud have been communicated. Also, since there was significant deficiency, they made certain significant changes to the internal control. That also has been communicated to the auditor and the audit committee. And last point was significant changes in the accounting policy and its impact on the financial statement. So just read through this topic. That's all that you need to do. Then, sir, as an auditor, above things, what am I required to do? You are not required to do anything. Just relax and chill. Okay? So you just need to see what was the process of the management to issue this compliance certificate. You see that process. Then you see whether management has some internal controls, whether those internal controls were assessed and some deficiency was found. If the deficiency was found, if the deficiency was found, they must have taken some significant corrective action. So whatever significant changes they have made to the accounting policy and internal control, whether they have been properly reported to the auditor and the audit committee. And last point was, let's keep the negativity towards the end. Come on, let's keep the negativity towards the end. Negative and adverse comments in the compliance certificate, whatever negative and adverse comments were there, whether the auditor has considered the same or not. And considering all these LODR requirements, talking about the committees, talking about the code of conduct, talking about the management discussion and analysis, talking about this compliance certificate, whether the auditor feels company has complied with these requirements of corporate governance. If yes, he will issue a proper certificate. If no, then he will qualify the report. So this certificate can be given by the auditor or can be given by the company secretary. So I hope you enjoyed this revision. I hope you enjoyed this chapter. Also, do share your feedback with me. If you are watching this video on YouTube, do share it in the comments, and otherwise you can share with me on my personal Telegram numbers. Okay? So just study with happiness, because when we study with happiness, then only we progress. The exams are near. You are studying well and everything will go as per your wishes. Okay? The Almighty is watching your efforts and everything will be well in the end. All the best. Take care of yourself, and yes, do make me and your parents proud. Keep going.